Thanks so much, Denise. Investors are anxious to see what today brings on Wall Street after yesterday's nearly 600-point loss. The Dow Jones Industrial Average traveled, get this, more than 3,000 points in down and up moves. Simply Money's Nathan Bachrach joins us now to talk about what investors need to keep in mind this week, because we may not be done with the volatility just yet, right?
Well, actually, we're going to probably have another crazy day. This time, I think we're going to start to see some separation, which means that China is going to do whatever China is going to do.
Okay.
And the United States, you and me, and anybody with a 401k is going to look and go, you know what? This may not be great, but it ain't 08, all right? And I'm liking I talked to my boss yesterday. You should do this, and your boss will say, yeah, orders are looking pretty good. We're still looking to hire. It seems like people are buying cars or at least trucks in this country like they're going out of style. And so we're going to come to the conclusion, I think, today, you know, we're okay. Those guys over in Asia, not so sure.
So this is not 08. We should not be abandoning ship at this point.
This is not 08. This is not, the banks have not come to a grinding halt. That's what happened in 08. We have capitalism as a big engine needs a lubricant, and that lubricant is cash. And in 08, bankers would look at other bankers and say, you know what, I'm not even going to lend you money overnight. And they say, well, what am I going to do between now and the morning? Sorry for your bad luck. And so we had a problem in 08 that we don't have now. We had houses. We were giving, you know, if you could fog a mirror, oh, great. You could buy a house in 08. Now, you know, you go to a bank and you try and get a house, they're going to go, all right, Megan, let's show me what you've got here financially, because we just don't give a loan to anybody. So a lot has changed. Now, China is also going to be intervening. They've reduced their reserve requirements. They're probably going to pump some cash into their markets. They're going to tell people that you can't sell your shares. Imagine in the United States if we said, no, we don't think you can sell your shares today or even for a week or two because we want to calm things out while we may have a riot on the streets. Now, I think the real question to ask ourselves over the next couple of days is, who was doing all the selling? It wasn't you. It wasn't me. When I walked in at the assignment desk, I said, what should I do?
Right.
Well, when you look at 401ks, I don't think you're going to see a lot of people woke up yesterday, got to work, and said, whoa, I got to be selling, because those orders went in over the weekend. I think it was the smart guys. I think it was all the geniuses at Wall Street who tell you and me, oh, hang in there for the long term. You know, don't try and time the market. And what did they do? They didn't hang in for the long term. They didn't time the market. Those two things we would always tell you as an investor you need to do.
And that was just my next question. So what should the average Joe out there with their 401k be doing today?
I'm going to use do something that investment advisors shouldn't do. I'm going to use a gambling analogy. All right. Let's say I find you at the Horseshoe Casino and you're sitting at the table. I say, "How you doing, Megan?" And you go, "Well, yesterday I had $10,000. Today, though, which would have been Monday, I've only got $940. I'm thinking I'm going to just cut my losses because, boy, that was a big drop." And I said to you, Megan, I guarantee you, if you sit at that table long enough, you will get your $800 back, and you will have a profit. And if you do this year in and year out, 80% of the time, you will win. I couldn't pry you out of that casino. You would say, well, I'm staying. You know, I'll stay till I'm positive again. That's what you need to do as an investor. As long as your allocations are right. If you have way too much stock in your 401k, well, then maybe you need to kind of put some bonds in there and get some balance. But if your allocation is right, what I would say right now, take 2 aspirin and call us in 6 months.